Good evening, everyone. This is Mark from Quat Line Trading, and what I would like to do is give you a quick overview of all of our indicators. This is not meant to be a training tutorial. Simply, it's engineered to provide traders who just bought our software package with a starter overview of all of our indicators. Now, the first, and really what I'm going to do is I'm going to show you how to build a chart and show you how each indicator works. Now let's start really from scratch. Now, our up candles are aquamarine. Now, you're not going to have to go through all this work because we're going to provide you with templates. But just so you have an idea, we're going to do this. Our up candles are aquamarine, and our down candles are orange-red. Now, let's put on our indicators one at a time. The first indicator I'm going to put in is our moving average colored, and let me just remove that. That's a Forex indicator, but we have a futures equivalent. There's our moving average colored, and I'm going to put in our trend, RL trend. Now, I make the RL trend a 3, and I make the moving average colored a 5. Again, this is going to be on all the templates, but now this is our moving average colored. When it reaches a certain slope, it turns red. When it's fairly neutral, it's yellow, and when it's sloping up, it's green. This is our proprietary 15-period moving average. You can see it also has a color bias. This provides us with really nice market structure to help us define price action. Moving average colored, 50-period simple moving average, 15-period proprietary moving average. Now we're going to add the RL15 diff. What this tells us, the RL15 diff gives us the distance of the candle open from the modified 15. We want to trade close to support, long, close to resistance to the short side. The chart's not set up nicely to show us that right now, but the candle body open of this candle is 15 ticks, or 9 ticks, off of the modified 15. When we use this very heavily in our trading. We're going to look at the moving, now we're going to look at our analytics. Find it, our MA analytics. They go up in the upper left-hand corner. So this defines the slope of the modified 15, the slope of our 50-period colored moving average, the MA diff, which defines the difference between the 50 and the modified 15. We use that for overbought, oversold signals. And it tells us how much volume is crossed on the particular session that we're trading. Right now on the E-mini, I'm making this video at night, only 13,196 contracts have crossed. Now we're going to look at RLV, right line volume. You can see we put an 8 in the lower right-hand corner. This tells us how many contracts are crossing the ticker per unit period of time. What we do, standard, is we look at a 1-minute period. So we want to know how many contracts are crossing every minute. Gives us an absolute assessment of volume. Now we're going to look at pivots. Pivot sensitivity is set to 200. We want that sensitivity to be very high, i.e. not trace out a lot of pivots for us. Now there's a pivot. This is a very unique pivot indicator. It will break when 2/3 of a candle closes above it. On a pivot acting as support, it will change when 2/3 of a candle body closes below it. We want to keep that pivot indicator on a sensitivity. This is a full chart. Pivot is set to 200. Now, let's add our indicators. Here's our strategy indicator. The strategy is a complex indicator. It needs an input. The 13 input is correct. It's 2 higher time frames. If you're trading a range, the next fib number after 5 is 8. The next after that is 13. 13 goes in a long period. And you can see the X is the strategy, system-generated strategy signal. It's a very good signal. Then we have the consolidation signal. We have so many indicators because we have different platforms and we have different, we've tweaked it for different types of, there's the triangles. Up triangles for a breaking consolidation to the upside. Red triangles for a break of consolidation to the short side. Also a terrific signal. These are smart entries. They use multiple time frames to create their entry signals, and they always occur intra-candle. Then we have our ABC indicator. Now, but I've chosen to, as a default, make the counter trend B candle magenta. Here's the C. So the software traces the A, the B, and the C. That's our ABC indicator. All software generated entries. Right here. All of these you can tweak. If you'd like to make the text bigger or move the offset, you can do it right here. There's the text offset. If you'd like that A or B or C to be further off the candle, you can do that. So let's say you want to offset it more, or you want to make the ABC bigger. Change it to 13, and you'll see that See that it swings further off the candle, and the A and the B and the C are larger. It's true for all the indicators. Now we're going to put in market profile. Just let me fix market profile. The default setting should have show candle histogram, true. Okay, everything actually is set up right. The problem right now is that there is very little volume. So let's go to the right edge of the chart. I'm not seeing much in terms of market profile, and we really should. See, the histogram should be true. Let me set that as the default setting. Let's see. Okay, there we go. Now we have our volume profile, and we have our market profile. Here's our point of control. Here's our value area high, value area low, and these are our low volume nodes, all based on this volume profile. Very important to respect it when we trade. Now we're going to add our 3-line indicator, which is a terrific indicator. Now this should be 13. I'm going to set that as the default. Just let me make sure that those default settings are exactly the same as my actual platform that I used to trade off of. Yep, 13. And what this does, this looks at a multi-time frame assessment. The higher line is momentum. The lower line is order flow. And it's just a great indicator. I put in the FX version, so let me take that out. I'm sorry. Let me put, that's our Forex version. Let me put in our normal 3-line. Here we go. Make sure we're at 13, and we're good. So we're moving along here, building our own chart. You're getting an idea of what each indicator does, what is represented by each indicator. Now, if these triangles are too big, you could just go over here, triangle down, triangle up. And instead of 15, let's give them an 11. An 11. We can always tweak them. So they're smaller. I think they're scaled a little nicer. Now, let's go to background bias. RL bias does a multi-term assessment of trend on our 2 higher time frames. Its algorithm already understands the speed of your trading chart, and by default looks at the 2 higher fib numbers. If you're trading a time chart, a 3-minute, it looks at the 9 and the 27-minute. If you're trading a tick chart, it looks at it defaults to the 2 highest fibs. So you need no inputs. You can see this huge area of green. The market just moved right up. It's also a great indicator. Now we're going to look at our quant line. So we have quant lines for many markets. And the quant line for the E-mini is quite powerful. We're going to put the quant line in panel 2 and the 3-line indicator in panel 3. Well, we don't have the ability yet, so we're just going to have to put them together. Now let's separate them. The 3-line is going to go into panel 3. And our quant is going to stay in panel 2. Now, each individual market has its own quant line. This is the E-mini quant line, and these are the correlative markets that we use to help us ascertain direction and see if we correlate with the direction of our trade. And they really help us trade with increased precision. When you have triple quants, you're really in great shape. Now, the major quant's the upper, intermediate is the middle, and the minor quant's the lower. That's order of importance. We ordered them in order of importance because there was some confusion. Now we've reordered them. So the most important quant's always 1. Second most important is always 2. Least important is always number 3. Now, for index equity markets, the Dow, the NASDAQ, the E-mini, and the Russell, we also have cash quants. We don't have these for any of the other markets. Now, here's the cash quant for the ES, and let's put that in the new panel. This is really a revolutionary indicator. You'll find it no place else. And it does increase the specificity of our trading. Now, the cash quants are going to take a minute to load. Now, these are our cash quants. So the cash quants use data from 21 metrics from the cash markets, not from the futures markets, to help us determine the direction of our futures market. When the cash quants and the futures quants correlate, you have a terrific trade. Now, we're really not going to go into trading strategy, but I just want you to know what they represent when you see them in the chart. So here's the futures quants, order flow momentum, and the cash quants. Now let's put in our volume indicator, our volume hammer. The volume hammer, new panel, it's going to go to the bottom, is also unique. So it's going to give us the number of contracts that are crossed or volume in minute intervals, even though we're trading a 5-range chart. So we can see right off how volume is doing under the candle that we're trading. You don't get big volume spikes because the candle is simply slowed down. They're not two individual variables that go into this volume assessment, and those two independent variables are rate of candle formation and the rate at which contracts cross. It's simply looking at one single metric, and that is the number of contracts crossing per minute. It gives you a great idea of absolute volume on the trade. Now let's see, I think we're pretty much done. Let me make sure we haven't forgotten anything. So the delta is an indicator that I don't use. I would not recommend that you put it in simply because it's not going to help you with the trade. Now the RL engulf is important because it helps define market structure. And what it does is show you a very, very strong potential entry signal. I'm just waiting for the chart to load. There we go. Now, the engulf, you're not going to see that often. Let's see if we can find it. Here it is. It's when a down candle engulfs the previous two up candles. You get this magenta dot, and it shows a tremendous amount of selling or buying conviction, depending on which direction it's pointed, in the direction of the trade. And you can see that this cyan dot, or magenta dot, I'm sorry, called the short trade. So it's a potential entry signal. It just has to be at the right place, obviously at the right time. Well, let's see if we can find it again. Here it is again. And actually on the E-mini, that's a winning trade. It's very small. We wouldn't take it because it's right into support, but it would have taken us through a first target. We don't use the chase dots anymore or confirm. Momentum entry, well, was never effective, and we don't use it. We have power entry, was never effective, and we've removed it. The safe zone. Now, let me put in our regular safe zone. Now, the safe zone is another way of defining overbought, oversold, and on our 5-range E-mini, it should be 13. And 13 stands for 13 ticks. And you're only going to see it on the right edge of the chart because the safe zone always remains 13 ticks off the 50. And you can see it right here. Go to the right edge. It's right here. Just that dotted line. Now that demarcates overbought, oversold. If you trade within the safe zone on both sides, the probability of getting a winning trade is enhanced. If you start moving long above the safe zone here, the predictive power of a trading entry begins to diminish, goes short here again. The power of a short trade starts to diminish. These are all our quant lines. There's one for each market. Paint bars, we worked for a long time on these. They do not work. Do not increase the precision of our trading entries. That's it. So this is our trading chart. And it's going to be very similar to this chart right here, our E-mini chart. It's not going to be quite identical because an additional component you're not going to see here is when order flow, which is this bottom line here, is in your favor, it's going to circle the candle in orange to the downside and blue to the upside. Just a heads up, this happens to call a lot of trades. So we want to know the direction of order flow at all times so we can see it directly in the candle color the candle surrounding. Now what you're going to do when you get it, all you have to do is right-click, go to templates, go to load, and because we're going to give you this template. And you're going to go to the 5-range E-mini. You're going to hit OK. And there's your chart. Starting to load. It's got a lot of information that's got to be inserted. Let's give it a minute. There we go. Now the only signal I did not mention again is this candle color surrounding. This is an orange, tells you that you have only order flow in your direction. You have to check if you have momentum. Order flow, though, is the key metric. Order flow in your direction. And that's going to come up automatically once you insert the template. But at least now you have a starter feeling for what all the indicators do and what they represent. There's your consolidation entry. There's your magenta dot hiding for your double engulfer. There's your ABC entry. Here's the 50. Here's the modified 15. Here's market profile, background bias. Here's our futures quants. Here's our cash quants. And here's order flow and momentum. And we're not getting any cash data. They're yellow. I'm doing this at night, and there's very little cash data pre-market. Pre-market, the cash markets are very slow pre-market trading. And here is our volume hammer. So I hope this gives you a quick start on all the indicators. They're all extremely helpful, and I believe if you spend chart time and work, you can get very profitable trading the system. So have a great evening. I look forward to seeing you in the trading room.